Hello everybody, welcome to this short offline video recording and educational for the TSI, the True Strength Index. So a bit of a techie session. This one, let's hope it's helpful for many. We're on the charts. I've got a 1 minute chart open, euro, dollar. It doesn't matter what market I put it on. We'll add the indicator and I've reset it to its factory settings if you like. So I click the zigzaggy line, add indicator and type in here TRU for True Strength Index. That's what it's called, True Strength Index. Add the indicator or highlight it and then add. Now we've got it, and I can go into the settings because the settings that it gives me initially are, if you like, rubbish. I want fib numbers. I want 8, I want 8, and I want 5. I have tested these. Other members of my groups have tested these and I really like them. We're going for green up, red down on the line here. And what I want to do is change it from, well, a line, but I want it to be a dashed line like this because it's part of my strategy, which is called inspect the Morse. 2 is plenty for the thickness. I'll scroll down now to the other bit, and again, green up for the style signal. It's the slower part. Red down. I'll make them as big dots. There you go. Did I just make you too small? That's it. So both are size 2. Green up, red down. That's not where it ends. We go into here and we edit levels. These are not the levels that we want. The 0, I do want a 0, but I want it to be really brilliant white against the black background and quite thick, so I'm going to give it a 3. And in the description I'm going to write action all in capitals and put a question mark after it there, because this is a secondary indicator and he's going to tell you to do something, whether it be a sell or a buy. So you'll have a confirmation of being able to go short below that line. You have a confirmation of being able to go long above that line. And then this level of 25, I'm going to edit it to be 34. And remember, the defaults that come with it, I always think they're rubbish. I'll make it 2 for thickness, and it can be white. And I'm happy that it's these little dashed lines here. But his description is going to say caution. Caution right there. Now we've got our plus 34 and our positive caution, if you like. Now we'll put our minus 34 in there. Minus 34. Same rule, same settings. A white line or white dashed line on a black background. 2 for thickness. And again, caution. Caution written in there. Done, and we can close that. But I want 2 more levels. I've got 2 more, they've come up as zeros. I want a 55, and I want that one to say overbought. And I want the level to be a lot thicker, like the middle one, and a lot cleaner. I could, what could I do? I could make the 34s 1, and in fact, you know what? I'm going to faff on you because I've already done it. I'm going to make them 1 for thickness here. Not you, this one, 34, 1 for thickness, because I don't want them to be too ridiculous. There you go, close that 34, close the action, close that 34. The 55 is 3, he needs to be a nice bright white. And then my last one, minus 55. And once they're all in there, I'll show you how I save it as default, and we'll talk about how he helps us. There's the white line, and there's 3 for thickness. We'll flick through some markets with them as well. Once they're all set, as you can see, I've got 5 levels on there, 2 minus, 2 positive, and a 0. I can collapse this and say save as default there. Now every time I load one, that will be the default. So as a secondary indicator, what he does for us is he confirms your long signal, and then he confirms your short signal. And as he drops through a caution level, he says, hey, beware, I might be going too far. When he drops through an oversold level, he says, hey, really beware, I might be going too far. And it's okay for him to drop through a level. It is not okay for him to come back. So there would be a clear and present exit. And if we look at that and manage it, from there, from that bar, you've got a valid confirmation of a sell. And you can be in that sell from there, 109.75. You'd be out the sell over here. A worst case scenario, 109.40. What were we? 109.75. So we're looking at a 35 pip move there, just using our friend the TSI. Now, there's no long signal here, but you can look for divergence on this indicator. It is a MACD. The TSI represents the lines of a MACD. So if you do see higher highs, lower highs, etc., and I'll try and find some on here. I'm going to scroll back. There's some right here at the end, isn't there? Not really. There we've got lower lows of a slightly higher lows, and then we get this pullback. So we've come up from the oversold line, which, wouldn't you know it, I always forget something. I'll allow myself this one. We go into the minus 55 and we tell it, you are the oversold level. And once we've put that in, of course, we have to resave it as a default because we've made a change. Now we've got oversold, caution, action, caution, overbought. And if we can find the part where we go through the overbought line, or even rejecting the overbought line there with some lower highs over clearly higher highs, rejection of the line, going through the caution, dropping through the sell zone, and down we go. And remember, there was big news today. It is the 2nd of February. It's a big earnings release. It's a Thursday, so it's the day before non-farm payroll. Let's flick through now some of the markets. Here's the NAS. Obviously a bit of chop here after the US Open, but if we run up to the US Open, there's this lovely long confirmation up above action, right through the overbought, and back out. So if we put a crosshair on him, for example, here we've got confirmation of go long on or about this bar here. So you'd be in at say 12,614. There's no reason to come out until we go through up through caution, fine. We go down through the oversold line on this bar latest. It would be during this bar then that you'd be out. And well, we got a 25 pipper there. Now for an open, that's not bad. We can also see, if I take him off, get rid of that to make the chart bigger, we can see that he does give us divergence. We've got some lower lows there. You see that and that and that. This one almost kisses off the line. This one doesn't. That's higher lows over lower lows. And remember, this is only your secondary indicator. And I'm sorry, I'm giggling because there is a long on the go at this very moment. And he has, of course, gone up through zero. As at now, yes, you'd be finger on button. We know the 640 and the 660 are areas of support and resistance. So a struggle at 660 and you're going to take 20 pips. If we go through it, we've been looking for 700 earlier today. Let's see if we get that. I'll watch that one on the other screen. I do have it. But there you go. An overbought line. It's okay to go through, not okay to come back. Similarly with caution, we can go through, but we can't come back. We need to be exercising extreme caution then. Let's look at it on a really dangerous market like the Dow. There you go. We drop through the zero and provide this confirmation of this phenomenal drop there for some 200-300 pips or something. Congratulations to the lady who took 179 in the session. And we've lower lows, higher lows, a break back through the oversold. You've got to take the pips. You're out. Do we have reason to go long? Very briefly, but remember, the Dow is dangerous, so I'm not for a moment going to suggest that it's a market that you should be trading. Friend of mine calls it the dirty 30. I'll take that. Now we've looked at a couple of indices. Let's look at one more. A nice, safe and pleasant UK 100. Similar deal. Drop, drop, drop. Reject the line and you've reasons to come out with pips. Another currency, GBP dollar. What have we got? Did we change? That looked like it's the same as the FTSE. It can't be the same as the FTSE. Let me just double check. Oh, they did change. Okay. GBP dollar. There's the latest entry still going. You haven't had, and none of these would have been confirmed longs. So if you had another indicator telling you to go long, this one said no action required. But it did give you this sell off from around this 123.12, and yeah, reason to come out here. Absolutely, we went back above the caution line, so pips in there. A reason to go back in once we go back below the line, and out, so there's a small gain, small loss break even scenario. Back in, you are allowed. Remember, he's a secondary indicator, but in and out, so again, pips delivered. And if we go back to our NAS, he's still going. He broke the 660. We are looking for the 700, and a nice result there. That's how we use the TSI in conjunction with your other primary indicators. TSI is designated a secondary indicator. Please trade safe, everybody. I'll see you all on the next live session. If there's any questions on that, by all means share them. But I'm 10 minutes in and I don't want to keep waffling for too long. Trade safe. I'll see you on the next live one. We'll do another one on this if we need questions answered. Thanks, everybody. Bye-bye.